Hey everybody, good afternoon and welcome to 12-Minute Trading. My name is Doc Severson and I'm joined here by Dave Lukas, and today is Monday, the 8th of July. We're halfway through the year. I can't believe it. And boy, we are up something like, 15% on the S&Ps. It's been a good year. We're wondering what the rest of the year is going to turn out to be like. I think we've been, like I put in today's thumbnail, we've been kind of skating on thin ice for a while. We have declining fundamentals, but the market keeps pushing higher every single day. Today included, very glacially, very slow today, and on very low volume actually as of last week. But man, 3 days in a row, we just, busted a move to the upside last week. It was amazing. Dave,
we talked about that on Monday. We talked about these low volume weeks are prone to bigger moves. We weren't sure which way it was going to go. I had said that, easier to go down with an exhausted weekly chart. But as you and I talked, the different time frames on the weekly charts, we need to show that today on the energies, because you know me, for years, I was a 14-day guy. You, for the last, through the bear market into about now, I think it was a 9-day guy. And so I was looking at the 9-day too. And if you look at the 14-day, it makes a lot of sense where things are at. The move just wasn't quite over yet, but now it is. So maybe we were a week off, right? Maybe that was the last kind of parabolic push higher last week, and now we get into the traders are back this week, and we get into some real events and stuff. Like last week had a lot of positives. Tesla, really beat its deliveries, and a number of other things came out last week that were fairly positive too. And with algos trading, which most of it was, it just pushes things higher. And so now though, the real traders are back. We got Powell testifying for the next 2 days. We got CPI, PPI to end the week. We got, retail data out tomorrow. So a number of things. And then you've got that quiet period, after that for a week, and then the Fed, right? So, I think the market is definitely priced in, really pricing in more dovishness from the Fed, and more of a stated, yes, we're going to lower rates in September type message. But I don't know if that's going to pan out for it. So we are definitely at a point where if things don't go exactly as planned, right, probably see that pullback, right? And it would make sense. The way this rally has gone, usually, you can show the charts too. Yeah, usually what happens is this summer rally starts to kick off. You get you typically get maybe even correctiveness into early June, and then like by mid-June it rights itself, and then you rally through the first couple weeks of August. Then you get softness through the end of August, and then you start to have that real volatility and pull back into September. That's a typical year. We started it 3 to 4 weeks earlier this year. May wasn't selling May, right? So maybe at this point we're just a little bit early, and maybe that softness is going to start to creep in over the next few weeks into the end of July, and then maybe August is the month that we see maybe a bigger corrective action, not September so much. So time will tell, but that's on the horizon for sure.
So let me show you guys what I'm seeing in terms of the puzzle pieces fitting together. This is the monthly swing. We've been in this strong monthly swing since last October, right? So big energy here as we got halfway through 2023. That all unfurled to the upside. So we had the end of year move, and then we had our little spring fling down there, and then we've continued higher. So this is a big monthly swing, which is approaching exhaustion. So it doesn't have to just come to a halt here. It can be like an aircraft carrier and kind of coast to a stop. And when we get to the weekly chart in the middle here, this is where things get interesting, because we did have, for a period of, what is this, like the May timeframe, I think here. So that is like May into early June. This is where we had this move here. And what this did was this built up a lot of energy. So this is a weekly swing playing out to the upside. It's not quite done yet. Now, it's technically in exhaustion, but I think what we've seen is, in the past, we've seen moves go a little bit further than this, sometimes way further. That was a big monthly move, so that really took that one out. But I would expect this to coast for just a little bit longer before it goes, but it could go at any time. And what we're seeing here is that the move prior to last week, this was a daily consolidation in a very tight range, building up. And so what we're seeing over the past week is this daily swing moving to the upside. So everything is like lined up, right? Everything is lined up, pushing in the same direction. So again, for those that think that we're going to see something like this, that ain't going to happen, right? So we're not going to see something like that happen unless, if something like that were to happen, there's going to be a much, much bigger cause, like, a dirty bomb in New York or something like that would have to cause that. So
you know what would shake things up, at least for a short period of time, is if Biden gets out of the race. Right now, the markets are pricing in a Trump win.
Well, how would that change it?
Yeah, they're priced for that. So right now, Trump, based on the polling, is, after everything that's happened in the last few weeks, stuff is increasing that lead over Biden. So markets are pricing that in. Betting odds are pricing that in, like big time. So if Biden steps out, then you have the uncertainty, like who comes in, right? And, again, not to any, one way or the other, but Harris is a different candidate. She's more of an unknown commodity to the markets, right? Don't know what she's like really in public because you don't see her in public that much, right? And so the markets may find that uncertainty. Now, if they push her to the side and bring somebody totally else in, right? Then it gets really, it does. It brings a lot of uncertainty in, right? So that actually could impact the markets and cause some people to take some profits off the table from these levels and these highs. But we'll see. I mean, I think Biden sent a letter to Congress today saying he's in no matter what and all that stuff. And frankly, he's the one that has to get out. The way the rules are and stuff, he controls the delegates. He has all the money, so he would actually have to get out on his own, give his delegates to somebody else. And then Kamala's the only one that can actually use the money. So if it's somebody else, they can't actually use the hundreds of millions of dollars they have in their war chest. So you can see how hard this ends up being, right? So right now it's going to continue on like that, and obviously the betting odds are showing Trump. So I think the biggest thing, CPI this week is going to mean a lot. It always does every month, but it's going to mean a lot because the market really thinks now that there's going to be a rate cut in September. And so if with oil going up into the mid 80s, $83, $84 a barrel over the last month, I don't know if CPI is going to come down, right? CPI can tick back up, and that's not going to help make that case, right? No. The markets are really looking for a dovish Powell to come in and basically say, hey, we're planning on cutting rates in September, right? We adjusted the dot plot to one rate cut and everything. So we'll see what happens, but I just don't see it. And if the Fed wants to be known as political, then they would make their move in September. But I think they do it literally. Most people probably haven't looked this far ahead, but the day after the election is the November Fed meeting.
Right.
So
right.
like the day after the election, I could see them doing it in November, right?
That would be just such a chicken shit move to do something like that.
Yeah, really. So very interesting.
It's we're going to have, I've said this for the past year, but I really think the back half of this year is going to be, there's going to be cross currents that we just don't expect right now. Or we'll sit there at the end of the year and go, wow, we should have seen this coming, but you never really ready for,
well, and there's
all this stuff.
Other impactors out there. Does any of these foreign nation states make any interesting moves while we still have our current president and stuff versus if Trump's going to win? There's the China-Taiwan thing, but there's actually a lot of if you read a lot of the people that are in the know, the military experts and stuff, they're actually making more of a play on the Philippines right now than they are Taiwan, believe it or not, because the Philippines is weaker compared to Taiwan. Taiwan can fight in a lot bigger way than like even the Philippines can. So they're actually, China's rattling the Philippines a lot right now. So who knows if something happened there, so Russia, North Korea, I mean, you have those, wild cards always, right? I agree with you though. I think for the next, from now through the election, is going to be probably more prone to volatility. And then after the election, you have certainty, and I think we get the rally into the end of the year. I still make the call that we could be in recession by the fourth quarter in the U.S. If not, I think in 2025. And so 2025, to me, all bets are off as of right now.
Well, I've already started to see the Atlanta Fed GDP now number is starting to really come down to about 1%. We are starting to see that. The jobs report, I didn't think the jobs report was all that great last week. So it was slightly above consensus, but how many of those were
1,000 more government jobs?
Yeah, how many of those were government jobs? I mean, and so that doesn't really count. That's cheating. Because we saw the private payrolls drop, we saw construction jobs drop, we saw the unemployment rate actually tick higher. So there was lots of things about the jobs report which were fairly soft, which were market positive, right? Because that implies that we're going to get a rate cut, but we may tip over a lot faster than people expect when things happen like that.
It's always the same. The Fed will stay too long.
Yep.
And everything. So they're one jobs number, they're not going to start cutting rates on.
Yep.
Also, that goes to the other point. Like Powell's going to be speaking in front of the House the next 2 days. You and I were talking about this earlier. Powell's going to be in front of the House the next 2 days, right? And they're all going to be saying, like, especially like the and the Senate, the Elizabeth Warrens will be like, why aren't you cutting rates? Why aren't you cutting rates? Right? They're going to be all over him about that. And if he had the stones, you know, he would say, look, we've raised rates at the fastest point in modern day history. Okay. Now, normally that would slow an economy down, but you guys are spending drunken sailors $2 trillion more than you're taking in a year. And you're basically offsetting all the work that we're doing. Stop spending like idiots and it'll actually work. And we can bring rates down and we'll get the economy back and bring inflation down with it. But your spending is causing the problem. Volcker would have done that. He won't do that, you know. So you're going to get the him, the haw, well, we're data dependent, and you know things are going in direction, and you know eventually we'll get, you know, we're planning to, you know, cut rates in the future, and you know it'll be dependent on the, you know, we want to get back to 2%, you know, or that's our mandate, you know. That's the whole crap you're going to hear. So I don't know if that's going to really persuade the market any one way or the other. It's going to be that CPI number when it comes out.
No, it's going to be. It's just going to be. It's going to be Fed speak. I mean, he's going to take a page out of Greenspan tomorrow and say something completely unintelligible. But hey, guys, while we're here,
I mean, that's what you're going to get.
If there's anybody that's joining us live here today, if you guys have any questions, please pipe them in. We'll be here for another few minutes. While we're here, if you are watching this on a replay, which is probably most of you, send us an email and we'll include your question in next week's meeting.
Yeah. So, also, just for everybody watching too, be on the lookout. We'll start to send some stuff out this week. I do my mid-year review. Doc and I do that every year. We do a mid-year review of everything that's happened, where we're at, how we performed, you know, any changes that we're doing. We've got some new things we've been working on that we want to share with everybody. So we're going to be doing that at the end of July. We'll be sending out the invite for all that. And it's always a free event and everything. So look for that. We'll be putting it in this channel. You can join it and everything, but always love doing that event. And got some pretty cool things we've been working on too that are a lot of fun. We've been testing them in our hedge fund account and everything, which has been doing really, really well. We've got a nice pace on that account this year. We'll share a little bit about that too, what we've been doing there, why we've been doing it in this event. So yeah, we'll definitely have a lot to talk about. So put that on your radar. It's going to be the last week. I think right now I think we've slated it for, let me look at the calendar, Thursday, the 25th. It's going to be at 7 p.m. So mark your calendar and look for invites and everything surrounding that coming out in the probably within the week. So,
and if you're on holiday, if you're going to be traveling that week, let us know, and we will get it recorded so you can watch it later on.
Yeah, we'll get you. Yeah, if you sign up, you'll get the recording of it. So either way, you'll want to just grab a spot for it. So, but yep, cool. Well, let's see if there's any questions. I'm trying to think if there's anything else right now. You know what? Yes, pull up a chart of the Russell. I think this is really important right now. I think if there's a canary in the coal mine, it's the Russell. Pull up the daily, weekly, monthly, and we'll talk about this on it real quick. And you can do 14-day.
14 is set.
Yeah, let's take a look at it on 14. So, all right. So if you look at the Russell right now, right, we've got a really a monthly chart that's got charge left. We've got a weekly chart and a daily chart that are fully charged up. And look at the triangle on those things, man. They have squeezed down and squeezed down to a point where even if you put the Bollinger Bands on them, they are, really squeezed. And so when the Bollinger Bands squeeze, you guys got to think of it. Think of it like taking your hand and putting it in water, like, or taking your hands and like putting water and squeezing them together, how the water pops out of there in a direction. That's what's happening with the Russell right now. The Russell is going to make a move, probably after CPI, because the Russell stocks are very sensitive to interest rates, right? So if it looks like interest rates, if CPI is lower, and it looks like the Fed could, has a better chance of cutting sooner rather than later, you're going to see the Russell break out of this and go on a nice run. If it's the opposite, then it's going to go to the downside. But that's going to give you an idea of where the overall things are going to go in the coming months when that starts, because the Russell to me is always kind of that canary in the coal mine. It is something that the fund managers and all these guys have to build positions into over time, because again, people notice, like, they don't notice when you're trading 1 million shares of Apple as much as they do on a Russell stock, right? And then everybody sees it, so they know what's going on. Everybody piles in and stuff. So you have to do it slowly over time. And so, or get out slowly over time, either one. And so I think that with the way these energies are set up and everything, keep this on your radar, look at it daily just to see which way it's breaking out. And I'll say the 21, 25-ish level, if it clears that, then I think it's going higher. 1970-ish, if it goes down to 1970 and starts to go below that, then you're probably seeing the move to the downside. And you can play it too. Again, you can play directional on it. You can sell against it, all that stuff. But I just think the most explosive move in the nearer term is going to start in the Russell, because we just had the other, others kind of burn their energy out. So something to keep on your radar.
Interesting today to see what sectors are actually moving as well too. So if we go to heat map, NVIDIA, but surprisingly, like, not all the Mag 7 are working well today. So like Microsoft is down, Google's down, Salesforce.com, Adobe, Intuit, even Apple was down, Amazon's down, Tesla. NVIDIA's really driving things today, as well as some other.
Well, Tesla should be down. It's gone up like 60 points in a week. So
yeah. AMD is up. So there's a lot of semiconductor and chip stocks that are up today.
Yeah,
looks like these.
Something's going on there.
So that's kind of the move today. And then just looking at the overall sectors on the S&P, we have the VIX is down today, which is surprising, but communications, which is Meta, Google, et cetera, like that, those are down. Energy is down today. So, but tech is still up, and this is mostly due to NVIDIA. Just about everything else is just kind of flatline today. Interesting.
Well, and it makes sense. The NDX is into exhaustion, for the most part. Definitely on the 9-day time frame. On the 14-day time frame, the dailies, it's past halfway through the move. But the weekly's already into exhaustion. So you got a weekly chart that's exhausted, and we're at that upper Bollinger Band poking up above it and stuff. And so typically you're going to get some pullback overall. And so not surprising to see it, just kind of nowhere today. Again, part of that's also nobody's really making a move till later in the week either. They're going to wait for CPI and stuff. But after the move just had it, I wouldn't be surprised to see a nasty drop at some point. It could come on CPI if it's higher. Could come from something stupid Powell says, too. But it may be like a 1 or 2 day wonder. But those typically at levels like this, those kind of come out of nowhere.
Just a little detour for those of you that are interested in this. This is my intraday chart that I look at every day, and this is the red square is the opening range, which is the first 30 minutes. And so what we're always doing is we're trying to look for some type of range that we can sell within. So right after 10 o'clock, it looked like the price was staying nicely in the range of the opening range here. So I set up my initial iron fly right around that area, which is 55.80 or so. Right? So I was able to get out of 3 of my 5 contracts, and then I saved 2 of them to run. So I was out at this point right there with 3 out of 5. And then I said, okay, let's see if we can run the last 2 for an additional profit. Well, what happened was price started moving to the downside. And so what I had to do was I had to add a hedging position. So this is what we call the Devil's Tower hedge. It's it looks just like that sort of butte from what is that, Close Encounters of the Third Kind, that movie. And so it gives me more room for this to work, and actually the price was able to bounce back up again and stay within the range, and then I was able to get a nice profit right around here. So overall, it took about an hour of hold time for me to get my fair share this morning. But you can certainly hold it a little bit longer if you want to go for profits. But this is one thing that we don't talk an awful lot about, but there's a lot of things that we can share with you guys in terms of, like, if your goal is to make daily income or monthly or weekly income, there's lots of different ways to do that. So that is something where on a day-by-day basis, I can be flat at the end of the day and not have to deal with anything that happens overnight. That is usually the biggest risk that happens in the market, is something happens overnight to put some heat on a position. So, okay, we'll be here for another couple of minutes. If you guys have any questions, please let us know. Otherwise, we will bid you adieu for the Monday. We'll see if anything else is moving.
Another one I've been watching that I have been selling calls against is MU. So all these tech stocks have run, right? MU is not. MU has come down a little bit. So if you're looking for one that maybe you want to, just do the wheel strategy on, something like that, MU right now is at a pretty, for it at a pretty decent level there. So it's down near that lower Bollinger Band. It's a good time to look at buying some shares or even selling puts against if you want to. I just like that one right now.
And we talked about this last week, but this is worth bearing up again, is that when you least expect it, NVIDIA will more than likely pull back. And what we're looking for is a move down to roughly somewhere around 100. So if this sets up as a lower high, if this sets up a bull trap here, and dives down to somewhere near 100, imagine what these puts are going to be worth. Mm-hmm. So if we go out to something like, 46 days is pretty good. So right now we could sell the $100 put. So we'd commit to buying it, and we'd be paid $114 a piece for that, which is about a 1% return. That doesn't excite me. But at the money is paying about $10, right?
Right.
So that would be a pretty significant return, being paid 10% just to stand and deliver at a level that you'd be a willing buyer anyway. So that's what I'm looking for. I'm looking for the price too.
The moving average on the weekly chart, right in the middle of the band, is about 101. So the last time it pulled back right above the moving average. So
yep, right there.
We'll see, but it's going to take something to do that. It's going to take a bigger correction, obviously, to do that. But those things can happen in a hurry when they do. So,
well, NVIDIA is are they not the biggest market cap of the market right now?
They flirted with it. So they may still be, or they fell below a little bit. They're kind of flirting with it.
But if they do drop, they will take down everything with them. It will take down everything with them, because we still have the majority of, let's see if I can find this here. We go over to
if you take out the Magnificent Seven, the S&P is only up 3% for the year.
If we go over here to SPXA 200R, right now, this is the percent of stocks. We only have 66% of the S&P 500 is in an uptrend right now. That's it.
Yeah.
We're at all-time highs right now, but only 66% are even in an uptrend. Most, 34% are in a pretty serious downtrend right now.
Mm-hmm.
And then if we do the same thing on the NDX is at 64%. So we have 36% of the NDX in a
We have a lot more
downtrend
stocks making lows versus those making highs.
Yeah, that is a pretty serious divergence going on right now. And we've seen this again and again over the years, and it always ends up in the same way. It's just that they tend to go on for a long time before they they drop. So we could see something like that happening. This is why we keep coming up with these videos. The thumbnails are like, oh, we're near the edge, we're on thin ice, or things like that. It's not that we're trying to foment fear or anything like that. It's just that we want you guys to be aware that something could happen. All it takes is, one little snap of the fingers of Thanos, and all of a sudden everything flips around. So,
well, and it's just the natural cycle of things. Remember, we are squarely right now in a bull market. So anything is just a pullback in a standard bull market. A typical year has a drawdown of 10 to 15% at some point during the year. Our biggest has been 5 or 6, right? So, that every year, just about, if you go back, has a drawdown like that. So and that would actually, again, put in a higher low, put in another level of support to go from, right? So it's really healthy for the market to actually pull back like that to keep a bull going. If it just keeps going up, and doesn't have any pullbacks, that's when you get the really nasty crashes and stuff. So, and everything. So you want these pullbacks to come, and you just want to be ready for them. And that's kind of what we're saying. Hey, just be ready for it. If it doesn't happen, the more parabolic it goes, the harder it falls.
Right.
Just remember that.
Just something to keep in mind is the bull market that went from 2000, the cyclical bull that went from 2003, that kind of topped out in 07, 08, had no significant pullbacks until the very end. Right? Yeah. It just went, and until the end, that's when it started to do this kind of thing, in a classic formation of transitioning into sideways and volatile. So that was our big tell back then. Yeah. Okay, well, nothing's seen, so I want to thank you guys for joining us here today, those of you that are live and those of you watching on Memorex later on. Thank you very much for joining us, and we look forward to doing this a week from now. So from Doc here, and from Dave.
Guys, thank you so much. And be on the lookout for stuff with the mid-year event coming up.
Okay. Thanks, everybody. You guys take care.
All right.